Hood's earnings were actually decent when you go through the numbers. Hey everybody, in tonight's video we have a lot to go over. There's two in particular that had earnings tonight that I think we should spend some time with, and then we have to really talk about what happened with the Fed today. I think it's more important that we spend time on that so that you can have a good game plan going for tomorrow. I'll show you some of the things that I did on the day and what I think we're setting up for here. So there's a lot to go over. As always, subscribe to the channel. Click all notifications, and if you could take 2 seconds and please hit the like button, it helps me greatly with the algorithm. I purposely do not run ads in the middle of this, so if you could just think about that as a payment, that would be great. Let's get into it. So Hood, very first thing for those that have been watching the videos, I like when we set these 15-minute bars up after earnings and then whether or not we can get above those bars. Why is closing above these so important? Well, the reason that it is because these are when the algorithms and high frequency traders are whipping people around. These wicks are where they're saying, I've had enough, or I will sell everything that you have, or I will buy everything that you have. Remember, wicks are price rejection. These points are the exact point where somebody is saying, I've had enough. Someone down here said, I will buy all you have. Someone up here is saying that they will sell all they have. There's a battle, that battle is fought, and it goes from there. It's not rocket science. Don't overthink it. Just use simple supply and demand. That's it. Does it always work? No, it doesn't always work. Nothing always works. But it's definitely giving you an edge on the trade. We'll see how this acts going into the call, but the earnings were great, in my opinion, in comparison to the dumpster fire that it's been. So you have a business that has about $8.5 cash last time we looked. So the business in and of itself is trading for about $2. Now, operating expenses are 2.34 to 2.4. I want to go through this again. GAAP operating expenses, 2.34 versus 2.4, right? That's our estimate, not versus. I apologize. Down 32% year over year. They're cutting their costs by 32% down year over year. That's huge. That makes them a larger, in my opinion, a target if somebody's interested in actually acquiring that by lowering their expenses. Monthly average users are only down 1.8, which is kind of surprising considering the market and how many people are just throwing in the towel and saying no mas. No mas is no more in Spanish. So here you are, third quarter, 20 cents versus 31 cents, 361. Beat, 355. If someone told me they were going to beat revenues and cut their costs this much, I wouldn't believe them. So I'm very interested to see how this goes. As always, we're filming these before the conference call. Make sure you stay to the end. I really want to walk through one of the trades that we did today in the trading community, just so you can understand how we're trading right now and what to look for in these Fed meetings. It's really important that you understand the macro right now and also understand what I refer to as Fed speak, which is basically another language. Now, Roku earnings. So, I think people were expecting this to be like Netflix. Let's just be real clear about this. Roku is not Netflix. You can see the selling since March. If we go all the way back and look at Roku, you can see this double top, very clear. This is a classic stage 3 break. Then you have your stage 4, which is just, everybody hopes and dreams are smashed and everyone's saying, I'm not going to sell. I'm just going to wait, right? And we all know how that goes. So now the question is, this is where you're at and what do you do with it? Well, you watch earnings come out and you see if it makes sense and seeing if it bottomed. The CFO left for one, so that tells you where we're going with this. Number two, if you zoom in on this, you can see your range very clearly. Go into a 15-minute and you can see that range. So we have not made a decision. Now I know that this range is wild and people are saying, well, I'm not going to wait for that range. I'm going to make a decision. That's fine. People can do whatever they want to do. My point is that I think you might want to wait and see how this plays itself out. I think that that might make the most sense. For me, this was pretty much as bad as it gets. So nobody wants to see weak advertising comments right now. Nobody wants to see things like that. Nobody wants to see fourth quarter sales dropping from 900 million to 800 million. Okay, you just don't want to see this. So 10% growth year over year on a growing company is not what you want to see. No one's really paying attention to this quarter. What they're going to look at is they're going to look at fourth quarter and they're going to look at future guidance, because you can inflate this. And what's happening is people are seeing that and they're seeing the little games that are going on here. And I think that's why it's under pressure. Also, the CFO leaving is a huge red flag. So I'll give you a couple levels that I might watch here. So if I broke that 43 3/4, I'd probably look at starting a short position there. And I'd also want to see how we act at that 54.32 level. So there's a couple things that I'm going to want to watch for there. But they're the levels that I would be watching. And watch how these act on the conference call. They can get batted around a lot. Now, one stock actually was hitting highs today. And this is something that we actually were in the trading room and actually did on the break. Actually here, I'll just walk you through that trade. You can just see these levels right here. Breaks, goes up. This was very simple trading, very simple. Breaks, goes up, breaks, goes up. I mean, like, it doesn't get any cleaner than this, quite frankly, as just very simple trades, right? And then when we had the Fed news, we just sold the rest right into the trade. It made the most sense. Now, I would be looking at this if we rally tomorrow. If we rally at all tomorrow, and we're going to go through the indexes in great detail on what happened, but if we rally tomorrow, they're going to be looking for leaders. Stocks that are hitting all-time highs, they are those leaders. So we're going to want to focus on those kinds of names and see how they trade. But most importantly, the question is, what name should we be looking at tomorrow? Well, Apple, if you watched what happened, you have to start really being very careful out there with the larger cap names, especially tech after today. He made it abundantly clear, Powell made it abundantly clear that he is more concerned about trust. He made it abundantly clear that December could be a 75 basis point rate hike. Okay, this is not factored in. The people that were on social media today and discussing, quote, this pivot talk have absolutely no idea how to read what this guy is actually saying. And that's why you saw the market do what it did, because those that know sold. And what we were telegraphed the other day when we were all trying to figure out why they were doing what they were doing. Remember how we saw Google sell down 5%? We couldn't figure it out. This is the target we walked through in yesterday's video. It's important that you set all notifications so that you're aware of these. But we walked through these yesterday and said, hey, if you start breaking these levels, get out of the way. And that's exactly what happened. It worked out perfectly today for those that were in these trades and did these trades. I mean, every single one of them worked out. So the reason I'm bringing that up is we saw that selling yesterday in all those names I just walked through, right? And then what happened? We rallied. They rallied us. Well, look where they rallied you to, right to these pivot levels, right? So when we traded up here today in the trading community, all we did was we put a short on right up here and then comes down into the short, cover some of it, left some of the puts and short on. And then that was pretty much it. It was just a home run trade. And when we spiked on this, we're smart enough that we know what the news is. So, and I shouldn't say smart, I say knowledgeable enough. If you do this for a while, the way that you read technical analysis, you can actually read the Fed minutes and what is said before he even speaks. So we had an idea of what was actually happening here. So when everybody was getting giddy and buying this market, we were doing the exact opposite. We were selling our longs into it and we were actually shorting. Now with Apple, you can actually see the timestamp of the call that was in the room. So when we're doing this, I'm pointing this out for a reason. The way that you study technical analysis, you need to start studying macro and fundamental analysis, or the next 3 to 5 years are going to be absolutely brutal for you if you're just looking at a technical chart, because you're not going to understand why these moves are happening and why they're not confirming the same way, right? Technical analysis works by itself great when the Fed is pumping money into the system, which it's been doing since '08. Okay? If you've been trading before '08, you know that if they stop pumping, which they've stopped, it's a completely different ballgame. You have to understand the fundamentals of a company. You have to understand the complete macro picture, understand what the dollar is doing. It's a completely different game. And by understanding that game, you gain an edge. So keep that in mind. These stocks I just went through, Microsoft, Amazon, Google, Apple, they are not done going down. Could they rally? Yes. I'll say it again and you can timestamp this and cut it out. They are not done going down. Now, here you are on the 15-minute chart. I gave a couple really key levels on the live call this morning about what to watch out for. The first one was right here, was that 275 level. Then we walked through a couple key levels, and I'll give you one that I use that a lot of people don't use. See this 20? See when you broke? Okay, that was pretty much it. A lot of people were not looking at that today. Now, just take that level, okay, and walk through where that level was today. And you can see how you were battling it, right? Let me just get you right to that so you can see what I'm talking about there. There it was. So you can actually see the battle going on in that level, all in here, all day long on that line. We've rallied up and then you broke down. If I clean up this 20, this line right here is your 5-day moving average. You popped over it, you rejected. That was it. Now you can get signs. Pay attention to this because this is really important. It can save you a lot of money. You get signs that that is what's going to happen when you see something like this. When you see the SQQ, which will move faster than, listen to what I'm saying, it will move faster than futures will, right? Because the algos are actually reading like the ticks of the futures. And so when you start seeing these things try to position themselves, this is actually going to move first before the Qs are actually going to move. So when we were looking at this, we kind of got a sense of that, right? You can use this as a precursor to whether or not you want to short the market, right? And use this 5. It works exceptionally well, and we've done very well in the trading community with it. Now, what do we do now? Well, here's the same scenario, but what do we do tomorrow? Well, a couple things you have to watch. This is broken. There's very little to say here, and this video is going to go on a little bit longer than most, but it's important people get this. We broke. That's it. It's not a discussion. Could we bounce tomorrow? Yes. But until you get over this Fed bar, you need to assume that you've cracked, that's it, right? Now people will say, oh, you have to look at the 50 and we're below the 50. That's all fine and dandy, and yes, we are. But you didn't have to wait for that if you understood what was going on with the Fed. And that's the point that I'm getting at. When you understand that, you can look at those levels. For these levels, what you'd want to use is you'd want to use that right here. You'd want to use that 374 3/4. You'd want to use this right here, this 265.29. Okay, start there, right? But you'll see the same pattern over and over again, okay? Stay out of the way. I can't be any clearer. There's very little reason to think that you're not going to wind up retesting these lows now. Very little reason based upon those Fed comments today. So I'm going to keep this short and sweet. I know we went over a little bit, but if you're interested in the trading community, there is a link to preview it up here in the corner. And make sure that you subscribe to the newsletter, and there's a link in description, because that's really the easiest way to get into the trading community and get a sense of what we're doing. And there is a free newsletter that's coming out tonight, and you'll get that. All right, everybody, have a great evening. Stay safe and trade to win.